I think this actually helped because we have a lot of people now waiting. Thank you. I'm seeing all the comments. Everybody's very excited. And today this webinar was actually, I was very excited about it because everybody has been asking me questions about pound crosses, and it's been crazy. So without further ado, we're going to start. I know that the title was, the webinar was how risky is British pound trading after Brexit? So that answer is actually pretty short. I mean, if I wanted to base this webinar based on the actual title, how risky it is, it will basically be very risky and end of webinar. So we are going to focus and change the title a little bit more and talk about how to trade British pound crosses now that pound basically is incredibly risky, a risky trade, especially because we really don't know how the markets are going to react. So for those of you, well, before we actually get into that, I have to show this. And I really want to show you this as well, the fact that Forex trading and investing in high margin is very, very risky, and it can result in losses that may exceed your deposit funds. And so before deciding to trade Forex, you should really carefully consider your investment objectives, your level of experience, your risk appetite, one thing that is not here, and your risk tolerance. That is very, very important. What is your financial situation? Because we know, and I've been there as well, it's very, very easy to lose money. And I know I didn't do this. I just did want to, I kind of figured people can hear me, but can you just type in a Y for yes if you can really hear me, and if you can? All right. Okay, great. Thank you, Chris. Okay, cool. So today's agenda, we're going to do a little bit of an overview on the UK economy. We're going to talk about Brexit shenanigans. We had a little bit more coming out again about 3-4 hours ago. We had, and then we had the GDP coming out. So it's a lot going on. And I know some of you are actually located in London, so I'm not going to pretend to know more. I was in London actually last week. I tried to figure out and learn more about Brexit, but it looks like even people in London are as clueless as myself. And it's funny because they wanted to hear all about the U.S. and they were asking me, all right, so you're in New York, what's going to happen in the U.S.? And I'm like, to be honest with you, I have no idea. So it's very, very crazy times, especially, well, with pound crosses. And yes, Chris, I loved London. It was awesome. I'll tell you guys about it later. But people are very, very polite, by the way. It's beautiful. Really, New Yorkers should learn from them. So the matter of the fact is, before I even get into like the fundamentals, like these two topics, I wanted to know that the fundamentals of pound and US dollar are harder than ever to predict. And I, for one, a lot of you have been with me for a long time, and you know that I have mispredicted the market so many times. I thought Brexit is not going to happen, so I went bullish on British pound, and then bam, Brexit did happen. I lost money. Then I thought if Trump becomes president, US dollar is going to go up. Everybody thought so. It's going to go down. Everybody thought so, but it was quite the opposite and has been going up. So what we have learned in the past 6-8 months is that the fundamentals are just incredibly crazy at the moment, especially this year. So that is why you have to, so the good thing about making mistakes is that you want to learn from your mistakes. So we're gonna, all right, so what I basically meant was that we're gonna focus less on the fundamentals and more on the technicals and risk management of your trades so that you don't get caught off guard. Because one thing that we've learned is that we really don't know how the markets are going to move. We don't know in terms of, let's say, well, the U.S. is also going to have an impact or influence on the British pound process. And President Trump is a person that is very, very unpredictable, and nobody knows what kind of a tweet he's going to send out tomorrow. And he probably doesn't know that either, right? So it's very, very hard to predict the fundamentals behind the market movements. With that being said, I am going to just touch a little bit on UK economy. So we just got the GDP results. I'm going to bring this up. All right. So what happened is, so we've been having actually very strong results out of the UK. This is the past month, all the data out of the UK. Besides trade balance that we had, it was a little bit lower than expected, but not and lower than the previous time. It was lower than expected, lower than the month before when it, which was November, yeah, October. But other than that, UK economy has mainly done actually pretty well, right? So the retail sales yesterday came in red as well, but the GDP, it looks like it hasn't changed. The participants, market participants and analysts were actually predicting that it's going to drop, but it actually didn't change. It's the same as last quarter. I haven't had it, so this just came out, so we haven't had a chance to look at the details of it, but it looks like actually, so to the contrary that we thought that with Brexit, growth is going to slow down, this certainly has not been the case in the UK. And so that brings us actually to Brexit shenanigans, right? So what has been going on? I just published an article, well, that was yesterday, right, about the ruling that they had the day before. And it kind of, it was a little bit mixed, but at the end of the day, we saw British pound going up because it kind of looked like that there was hope for a softer Brexit. But then again, today, the government, the UK, published the draft of legislation that will allow the UK to start the process of leaving the EU. So that kind of explains why we saw a little bit of a pressure despite the better than expected GDP, right? With that, we've seen the bill which will give the Prime Minister the power to trigger Brexit under this Article 50 thing of the Lisbon Treaty, which is what really makes the Brexit happen and the divorce basically started. It's like as if you're getting a divorce and you go to the lawyer, and at the beginning you just talk about all the division of the assets, but that's just the division of the assets. Then you have to go to court, which is basically yesterday, and then you get the rest of the material. It kind of looks like really a divorce case. So if you've been divorced, if you know someone who's getting divorced, you probably can. My brother is getting a divorce. So kind of like, I'm like, oh wow. So it kind of has the same kind of steps, right? And meanwhile, when people are getting a divorce, things can go crazy and they can, like, I don't know, throw things at each other. So that is exactly what is happening with England divorcing the Eurozone. But so Theresa May, she has promised to do this, to trigger the Article 50 by end of March, and the government was forced to draw up the legislation after losing an appeal. But that was on, what is it, today's Thursday, it was on Tuesday, right, at the Supreme Court, because the judges ruled that the Parliament must give permission to start Brexit, right? And then on the other hand, we have the Liberal Democrats who have vowed to oppose Article 50 unless there is a guarantee of another referendum on the final Brexit deal that is agreed with Brussels, while the SNP has vowed to table 50 amendments of legislation. So this person, Mr. Davis, is also on the news a lot. So he has said that he disagrees with the EU Commission chief negotiator. His views that trade talks would have been handled separately from the Article 50 negotiations. And so there's a lot of, so that kind of basically shows that there still is a number of uncertainties. So with that, as I said, I didn't want to actually even go into the fundamentals. I just knew that a lot of people are interested to know about it, so I talked about it. But today, even though those of you who are Investiva students would know that I normally approach trading based on the IDDA approach, which is looking at the markets from a fundamental, technical. Let me see if I have it here. So this is the IDDA approach, right? So we look at the markets. Do I have it here? No, I don't. From a fundamental, technical, and market sentiment point of view. But right now with British pound crosses, I believe the best thing you can do is just focus on the technicals and your risk appetite and your risk tolerance. So with that, we're going to get into the technicals. All right, so we're going to start with pound dollar. We have a lot of our group members here, so you already got my signals for pound dollar yesterday. But for those of you who are new here or are not group members, let's take a look at the technicals of pound dollar. All right, so we're going to start with the monthly chart. Okay, what has been going on since the beginning of the data being accumulated? Pound kind of was like ranging for almost, it started in 1993, it kind of was ranging. The lowest that it had ever gone was 140, 136, right? So that was the lowest at the time. And then it just started going up. British pound was getting very strong, 2007, then the markets crashed, right? So the funny thing is, and this is something that you want to keep in mind, when the markets crashed, the U.S. market crashed, right? But that created a crisis. So even though the U.S. market crashed, so that means the U.S. dollar got weaker, right? Lehman Brothers went bankrupt, U.S. markets crashed, we had a real estate crisis over here, and that devalued the U.S. dollar. But it didn't stop the British pound to also drop versus the U.S. dollar, right? Because Lehman Brothers and also it was a global panic. So basically they both dropped together. Normally when we trade Forex, we want to find a strong currency versus a weak currency, right? But sometimes both currencies, they just get so weak and they just tumble down like they just drop down from a mountain. That's exactly what is happening over here. And the US dollar was dropping like versus the other ones, like dollar yen was dropping like a rock. But pound dollar, even though the U.S. dollar is quoted the second, this means U.S. dollar was actually stronger versus the British pound here, and that is why, and that is how we saw this massive drop, right? So why is that important? Because now we're kind of back. It's this 8-year cycle. Then Obama came to power. Things were nice. Pound dollar was ranging, but it was basically close to the lows. It never went back up all the way to where it was back in 2007. So it never really recovered, right? Before Brexit happened, so the market, pound dollar had tested this 138-ish level only twice in the past 16 years. 15 years, right? The one, it was in 2001, and then it was 2009, right? It tested even below that, but this is kind of the median. Then it almost reached here, 142 in 2010, but then it just went back up. So that is why before Brexit happened, this was acting as a very massive, strong support level around 138, right? But then Brexit happened. This is where I went bullish on pound. No, actually, no, I went bullish on pound yen. And then it dropped, and then it continued dropping, creating new lows for the pair. And now what is happening is that we have this brand new support of 119. When I was in London, it was 2 weeks ago, right? And in the airport, even though it was exactly when it dropped to 119, the currency exchange at the airport, they gave me cash for as it was in parity. So I was just leaving London to come to New York, and I'm like, what? It reached parity because, you know, they screw you over in the airport, right? And then I was like, oh, no, it didn't actually reach parity. They were just screwing me over. So yeah, I didn't, because I sold a bunch of my books in London, right? And some people gave me cash, so I wanted to change it back to US dollar. And then they gave me money for as if £1 was one US dollar, which basically gave me less US dollars. So I got screwed over in Forex in London. But that happens. And that's why online Forex trading is a little bit more manageable because you're not in a hurry and you don't have a plane to catch. And that actually really is a beautiful way back to what I always say, that patience is a profitable virtue. You really have to be patient when it comes to Forex trading, right? So anyway, so back to what it is now, right? The pound dollar, it reached and it tested this all-time low, and then it kind of has been just bouncing back and up, right? The past 3 months. This month it went all the way back down, then it went up. So this shows kind of uncertainty, volatility, unknowns, all the things that the fundamentals basically point at. We don't know what's going to happen. Volatility, all these stuff, especially because this one is versus the US dollar. So we have the US to worry about as well. This definitely is one of the riskiest pairs to trade. But if you did want to trade, and I am going to tell you, I do have a bullish position on pound dollar. And yesterday we did send out a signal. So here is the Ichimoku base trade that we wanted to talk about, right? So that is the method that I use. And we combine that with Fibonacci retracement levels. And oh, I do, by the way, have we have a 3-day sale on the Ichimoku Secrets book that I will give you the link at the end of the webinar. But so what happens is that now we've been having this kind of range. The Ichimoku cloud is flattening. The future cloud is actually kind of to the downside. But yesterday we had a very profound open above the cloud. As you can see, pound dollar broke below the cloud right at Brexit day, and it has never been able to really break above it. Even here, it kind of tested it, but this open above the Ichimoku cloud was not as profound. It was like right on the border. It was like, is it happening? Is it not happening? What's going on, right? We thought at the time that it is happening, right, because this happened. So we had this open. We got our hopes up, and I think this is the time that I entered the bullish position, but then it went back down. So it was an affirmative. And if you have read my book, you know that we need a third confirmation if we have low risk appetite. We still have not had the third confirmation. We have the first confirmation, the trigger, which is the Tenkan line crossing above the Kijun line, which is happening right here. We have the second confirmation, which is an open above the Ichimoku cloud, but this is a little bit low in terms of strength of an indication because, as you can see, the cloud is kind of flat, right? But we still don't have the third confirmation. Who knows what the third confirmation is? We have a ton of people who have read my book here. Who can tell me? What is the third confirmation that we look for? I'm going to put you on stop here if you don't. Open and close above the Ichimoku cloud. Well, yes, that was, it hasn't closed, so that's correct. What is the next one? I'm going to put you on spot here. Margaret, do you know? Ina? Melissa, you should know that. All right. All right. So the third confirmation is when the Chico span, right? You guys, you have my book. Why don't you know this answer? You have to know this answer. The third confirmation is when the Chico span, this one, right? The lagging line, yes, above the cloud. Good job, Chris. Yes, that's correct. Okay, so we still don't have this confirmation. So even though we had 2 confirmations, and we did send out a signal yesterday to buy at the pullback, right? So when it breaks above the cloud, you wait for a pullback so that you can buy low. right? And then we're looking to target 128, right? Or actually, I think it was a little bit below that in the signal that we sent out because we really don't want to take much risk over here. But if the Chico span does break above Ichimoku cloud, that is when you can get a little bit more comfortable or more well confident in the signal. All right, and so that is what we're waiting for pound dollar. I am only going to trade it on the daily chart at the moment because any time frame below that is going to be incredibly risky. Okay. So with that, here are the levels that you want to keep an eye on for pound dollar. Let me actually do this from scratch because I can see you're asking me how did you draw the Fibonacci retracement levels. I'm going to help you do that. All right, so we're going to, so there are many ways of course, to draw a Fibonacci retracement level, right? One is, well, going from all the way back to the top of the top of pound dollar to the bottom of the bottom, right? Or we can try, because we want to do a little bit shorter term, like we don't want to go crazy with our target, we can use a more recent downtrend, which is the one that started right the day before Brexit and drag it down all the way to this new support. So we're going to do that now. We're going to do that right here. So I'm going to just use the body and see if it falls on. Yeah, it's actually all right. Yeah, so I'm just going to use the bodies, right? So then I'm going to adjust, readjust my other levels that I had found before. So the 50% is still 50%. It's right here, a little bit above that. The 23% is, yeah, so this is actually where you can use your first target, I believe. So if you get in, you wait for the pullback, it's going to go down to 125. I believe the signal we sent out was 125.42. So you're going to wait for the pullback, get in, and then target 126.54-ish, right? Then we have the 38% Fibonacci. This is going to be a little bit more risky, and we need a lot more to happen for the pair to reach that target, right? So, and another way to also use, if you want to go get more complicated, not complicated, more detailed, and like just get out as soon as possible, you want to have a little bit more short-term targets, you can use this newer downtrend as well to see how it falls down. So the 50%, yeah, I wouldn't go. So this is basically the zone between this 50% and 60%, right? This zone is somewhere in this middle is where the maximum that I would target at the moment, and until we have more clue on what is going on. So I would just go somewhere in this between at the moment. So I'm not going really by the book, somewhere between here, right? So if you get here, you either get out here or a little bit above the 50%, the small 50% of natural trace. With stop loss, we don't use stop losses. I've explained why, but if you do need to use stop loss because of your risk management, those are going to be set at, the first one is 122, right? And the second one is 119.60, our new all-time low. All right. So that was pound dollar. Everybody's okay? We're going to move on to another pound cross. Let's move on to any recommendations. We're going to go to pound yen. Let's do that first because I have a position there and I'm not happy. All right. So pound dollar. Okay. I'm sorry, pound yen. So this is pound yen. What has been going on with pound yen? Incredibly crazy stuff. So we're going to go back again with the monthly chart. All right. Pound yen also has been ranging, right? So this is what I tell you every single time. If you remain in any kind of position in Forex for long enough, chances are you're going to make money because major currency pairs, major and minor ones, they just cycle, right? Want to find that median price and get in whatever direction and wait for the market to resolve. So with pound yen, the all-time low was actually back in 2011, and it was 116, right? So 1 pound is 116. Okay. And then we have this thick Ichimoku cloud that after Brexit, pound yen just broke below it. This is my most painful trade that I am still in, because around here, right? Around here, I think I got into a bullish trade around here because I thought Brexit is not going to happen, and I thought, you know what? It's going to break above this. It had just broken above this resistance level, right? And I thought it's just going to start moving back towards the highs of back in 2007, right? I never believed that Brexit will happen. I never believed that Trump will become president. So that is basically what happened. So I made a mistake. And we're having a question over here. Can you please send me the video? Of course, Grace. We're going to have the replay. If you join through Orbex, you're going to find it on Orbex. If you join through Investiva, you're going to find it on Investiva Messenger. Okay. So, and by the way, didn't miss much because we did start 30 minutes late. So there's 30 minutes left, and we've just covered pound dollar so far. So back to pound yen. So what is happening now? After Brexit, pound yen just broke below the HMO cloud, an upward moving HMO cloud. We had the trigger and everything, right? But this is the monthly chart. And right now what's happening is that it looks like at least it bottomed out at 127. So for me, what I did to hedge my crazy, stupid mistake that I made before, I don't know where, I have to actually look. I think it was probably here. Yeah, it was beginning of 2016 that I got in that bullish trade. So to manage that, I've been adding on to my bullish trade, and I got back in when it, and I added to my bullish position when it bottomed out. So I'm kind of I'm trying to lower my average position, all right? And that, by the way, is what I mean adding on to your position when I send out our signals, okay? So now what is happening is that we saw this massive bullish engulfing in November. That was so that's November. And then another one, it kind of tried to touch the Ichimoku lower band, wasn't able to. And this month, it really was volatile, went all the way down, but now is forming this long-legged doji candlestick pattern. So kind of from the monthly chart, we're in indecisive mode, obviously. And we have only, February is starting. How many business days do we have until February? We have 1, 2, 3. So we have 3 business days until the next monthly candlestick starts. And we really want to look out, and we want to watch out which direction it's going to go after this, right? Kind of looks like the sentiment now is back to bullish, especially with Japan. So this the counterpart is Japan, right? So Japan is now scared because, again, Trump has said that he wants to take out of the TPP, which is Trans-Pacific Partnership, and with that, Japan could also see a ton of volatility because, well, they're now scared, and you really have to see what happens on that end. So pound yen is not any less risky. Like as I said, we're in very, very risky times. So with that, we're going to go back in the daily chart again and see what's happening over here. Pound yen, we have mixed signals, right? we have a Kijun line breaking below the Tenkan line, but at the same time, the pair wasn't able to break below the Ichimoku cloud. It's now touching above it, right? It did break above it before, so if we were trading based on an Ichimoku Fibonacci strategy, you would have already taken profit after the pair broke above the Ichimoku. So I think we did send out a signal over here when we had the confirmation, and your profit taking would have been at anywhere between 38, 50 to 61% Fibonacci retracement level. So you already should be out of that trade. So that was good. So what are you going to do now? Okay. So now we're again now waiting. We're waiting to see if the pair is going to be able to break and confirm above Ichimoku cloud once again. We already have the Chikou span. So we kind of have this bullish sentiment. We can see the bullish sentiment on the daily chart as well, right? Because we have all three. So this could have just been a temporary pullback and a new upward movement. This could be that. All right, but if you don't have a position in pound yen, I do recommend that you wait a little bit longer and see if it really can break above pound yen again and above the Ichimoku cloud again. And if it does, so let me tell you where you can take profit. Your take profits are obviously, the first one is going to be the 61% Fibonacci level over here. And the second one is going to be 78% Fibonacci right over here. And I really don't recommend that you do anything. Just take your profit and get out. Because as I said, it's pretty risky times at the moment. With stop loss, again, we don't use stop losses at the investee, but if you do need them, you can use either a little bit below the lower band of Ichimoku cloud or as your first one. Second one can be the 23% Fibonacci right over here, actually a little bit below that, right? Because you don't want to get kicked out prematurely. Or you can go ahead and go a little bit below the all-time low, the new low, right, around here. So with the stop losses, you don't want to go exact at the support levels. You want to loosen it up a little bit because sometimes the market go back and test that support level and then just back and corrects itself. So you don't want to just get out prematurely. You want to have a little bit of a maneuver time or space so you don't get kicked out. Because the most painful thing is that you have a stop loss over here, you get kicked out, and then the market goes back up. So you don't want that to happen. You want to have it a little bit looser when it comes to the exact support level. All right. All right, so that is pound yen. Any questions so far? Wow, we have a very great crowd, by the way, today. Welcome, everyone. Nick, Piet, Shigeki. Oh, we have Japanese people here. Warren, Michael, Melissa, Margaret, Lebogang, Khalifa, Grace, Ahmad, Koro, Chris, Maris, Angel, Alvin, Alan, Abdul. Wow, a lot of people. Okay, cool. So it looks like we don't have a questions up until here. So we are going to go, and I know someone asked me yesterday, or was it the day before in our group, about pound Aussie. So I don't remember who it was, but I'm going to cover that. All right. So let's do pound Aussie a little bit and see what, or was it Aussie pound? Sorry. Which direction? Let's see. Direction is the one that covers pound Aussie. Yeah. All right. Pound Aussie. All right. So now we're taking a look at pound Aussie. Going back the monthly chart again, seeing what the pair has been up to. This really kind of looks like pound yen, doesn't it? A little bit shifted, but it bottomed out also, not the same time at pound dollar, but kind of at the same time at pound yen, 2011, up, then broke below. But so the sentiment below the Ichimoku cloud is actually a little bit slower. But also the correction after that, right now, we have like definite mixed signals over here. So it's testing below the Ichimoku cloud. Oh wait, actually we have more of a bearish signal over here, which is interesting. So we have the Tenkan line broken below the Ichimoku cloud. Chico span is still lagging. It's not here. And then we have this bearish engulfing that kind of happened very strongly, but now it's retracing back up. Future cloud is upward. So it's a little bit tricky over here, isn't it? The all-time high with pound Aussie has been 3. Wow, good luck anyone who visited England from Australia, right? And the highest it got, well, recently after 2012 was end of 2015, right? So it was 2.3, and now it's very affordable to visit the UK from Australia. So if we have any Aussies in the house, why don't you go and visit the UK right now? That's actually one of the reasons I went to London, because it was like, oh my God, British pound is so cheap. I can do whatever. So here in the monthly chart, we have more of a bearish signal, but still a little bit mixed. Let's see what's going on with the daily. Look at that. Incredibly mixed. We're right in the middle of the HTML cloud. Absolutely no signals whatsoever. So remember, guys, you don't want to trade just for the sake of trading. If you don't have enough evidence or enough confirmations, not trading can be more profitable than actually trading. With pound Aussie, like we saw at least with pound dollar and pound yen, even though the fundamentals are incredibly risky, at least we have some technicals to look forward to. But with pound Aussie, it's like not only we have all these, so Australia on the other hand right now is also facing, well, because they are a part of TPP as well, right? And now Trump has said that he wants to take out of this deal. And then Australia has gone and said, oh, you know what? We don't even care. We're going to continue having this trade deal with China. So they're kind of playing it tough with Trump. So Australia, we don't know what's going to happen in that as well. And if China does become, so this is what you want to know about Aussie dollar. Aussie, Australia and China, they're trading buddies. They are the largest trade partners. And China has already, because Trump is doing all these stuff, China has already gone out and said, we are ready to become the superpower of the world. Because right now, there's the second largest economy. Japan is a third. America is number 1. But now Trump says he wants to put America first. And China is like, and by putting America first, well, again, there are so many different analysis around this, but I've been talking with professors at the college that I teach at, and they are pissed off. I'm pissed off. Like, we basically think that the TPP would have allowed a really healthy global growth, but putting America first, which means America going solo, that means less trades, like losing your allies, all that kind of stuff. So China has a very good chance at this moment, if Trump really doesn't back down on his international rhetoric, China has a very good chance of becoming the superpower, and that would be very interesting for Australia because they already have very good relationship. As I said, I'm not a politician. I'm not a macroeconomist. I'm just telling you what I've been observing and what I've been reading. And this is my belief, and I'm not pretending that I know exactly what's going to happen, because obviously I've been very wrong this year on 2 incredibly big occasions. So my point here is that as I said at the beginning of the webinar, that because the fundamentals are very crazy, you want to really rely on the technicals. And with the technicals, at least with the technicals, if you're going only to rely on the technicals, we need really superior confirmations from a technical point of view. And if we don't have that, we are not going to trade. So sorry, buddy, that asked me about pound Aussie yesterday. I do not think it is a good time to trade pound Aussie because on the monthly chart we have bearish signal. On the daily chart we have, as I said, Kijun line drop crossing below, but it looks like it's kind of trying to cross above the HMO class. So it's very, very mixed. No pound Aussie trades at the moment. All right. So finally, we are going to cover Euro pound. How about that? Another interesting pound euro. Which direction do you want to go? Pound euro. Exact opposite. By the way, it really doesn't matter which direction you go. It really depends on which direction your broker provides. Hold on one second. Provides. With Orbex, it looks like my screen might have. Hello, can you hear me? All right, let me just check. If we can, hold on one second. All right, so we're gonna go here. I want to see which direction Orbex provides British pound. All right, so it's Euro pound, right? This is the direction you want to go. Okay. So, all right, so with Euro pound, again, let's go back to the monthly. And so while this is an interesting pair, right? Excuse me. It's getting cold in here. So because Britain is divorcing the Eurozone, and that obviously is going to impact both the UK and the Eurozone. In the meantime, I think last time we were covering British pound, we were talking about Brexit, which is France exiting Eurozone or other countries exiting Eurozone, and there are talks that, well, the Eurozone can just collapse and fall apart. In which case, I do not know what's going to happen to Euro. I'm thinking that Euro is going to, well, obviously go lower, but are they going to take their currencies back? I mean, we don't know. There's a lot of uncertainty, but that is a little bit more longer term. We don't have that much information on that either yet, right? What we do have information is, as of now, is British pound. So Euro pound has been very interesting, right? The cycles are not as periodic. When it drops and stays at that level kind of for a while. It goes up, stays at a level for a while. Now, this time it's just like really haphazard. It doesn't have really a nice shape to it at all. But one thing that has happened is that it broke actually above the Ichimoku cloud. After Brexit, so Euro became stronger than British pound, right? So this is what's happening. Euro is becoming stronger than British pound. And then it went and it actually touched the highs, well, very close to the all-time high, which is interesting. It's very impressive, right? So the all-time high is 0.97. And this time, after Brexit, right before the US elections, it kind of reached that. So we only have like a few, like, it's 92.2, so we have like a few pips to reach that, which is interesting. But then it dropped. It kind of pulled back, corrected all the gains, like erased all the gains, and now it's just been incredibly volatile, right? It's going all the way up. It tests it, it goes down. This month it went again kind of back up, but then it kind of erased that one as well. And that also had to do, by the way, with ECB's statement. So they didn't have any change in policies, but they have inflation pressures, and it's kind of like they have said in the statement, Mario Draghi said that it's too early to comment about Brexit or Trump, and they are in the wait and see mode when it comes to Trump's potential policies and the possible impact of Brexit. This is back in this is a week ago that this came out, and that kind of put euro a little bit in a weaker position. It like versus the British pound, while versus US dollar, euro has been going up pretty rapidly, right? So it has been interesting. So going back to so on the monthly chart, it kind of is very indecisive, right? It has broken above the HMO cloud. We already have kind of a bullish sentiment. This could have just been a temporary pullback. We could see it. But the thing is, it broke above the HMO cloud and it reached almost all-time high. It reached this resistance. So this break above the HMO cloud, I wouldn't rely on it that much because it already covered it. It broke above it and it went all the way up. And if you were to take advantage of this, you would have already been out, right? So going back to the daily chart, look at that. So it is obviously inside the HMO cloud, another indecisive signal, right? We have the Tenkan and Kijun line. They cross above each other, but now they're kind of reaching back. We don't know what's going to happen, right? Let's see if we can just find something here. Here, at least we have this definitive trend, right? We have this uptrend. It kind of looks like it's actually going to break below the cloud. And if that happens, and if the Tenkan line and the Kijun line cross over, and the Chico span is already below the cloud, and because this is after a long uptrend, that actually could be an interesting bearish signal. So one trading strategy, so I am going to give you something with your account. All right. If the pair breaks below the Ichimoku cloud, the daily Ichimoku cloud, right? If it breaks below it, then you can get into a bearish position and target 0.8361, 38% Fibonacci retracement level. If you want to take a ton of risk, if you are a risk taker, and even though we don't know anything about what's going to happen with Eurozone and Brexit and how the income is going to be, if you want to take risk, based on the technicals, I'm telling you, this is incredibly high risk, all right? Incredibly high risk. I'm repeating myself. But if you want to take that risk, okay, because we've seen this uptrend, there could be a new wave of correction even towards the 50% Fibonacci, which is 0.80, almost 98. So these are your bearish targets if the pair breaks below the Ichimoku cloud. So you know what to do, right? So when it breaks below the Ichimoku cloud, you don't get into that trade immediately, because normally after that massive bearish move, right, I would say that this could happen actually like in February. So you're going to have like a bunch of candlesticks. It's going to break, then it's going to correct back up. This is where you want to get in. You want to get in at 0.80, like you want to get back in, right, at when it corrects. And then you're going to target the support. If you want to take risk, you're going to target this one. For stop loss, you're going to use, well, you can use either, well, the 23%, this is for someone who really wants to use a stop loss. You can use 0.8690 as your first one, or a little bit above of this new high, which is 0.9212. All right. So that was euro pound for you. Okay, I'm getting a question about Ichimoku Secrets. Yes. So Ichimoku Secrets is in fact on sale right now. And so anyways, back to this. So we covered what else do we have with pound, British pound? What other pound cross there is that we can? British pound. Do you have any requests? We can go with CAD. All right, let's do pound CAD. Let's do that. All right, so pound CAD is the last one we're going to do today. Pound CAD. All right, so this is actually a little bit better. Let me actually quickly just take a look at dollar CAD. Dollar CAD is standing. All right, Canadian dollar is gaining momentum. So with pound CAD, this is interesting. So it has broken below the HMO cloud. We have a bit of a good proportion of bearish signal that could continue, but it could also have bottomed out because the lowest that pound CAD has ever been is 150. Yeah. So this is our support range, and it did reach and get close to this support level recently. We are going to use Fibonacci to see what are the levels. Like it basically has completely erased all the gains, right? It comes all the way back down. So it's unlikely for pound CAD to go anywhere. I mean, it could start if Brexit really goes out of hand. We could see new lows for pound CAD as well. We're getting some questions here. Yes, pound CAD. Okay, so so if Brexit goes really out of hand, as I said, there is a possibility that we see pound CAD forming new lows, right? Especially now, like everything going on with the U.S. If the U.S. really loses its power, Canada could be the next best thing in Northern America, and Canadian dollar can also start gaining strength. So with that, here we have a little bit more of a bearish side of a signal, right? Our support is right here, and right now it's right. The pair is right at the pivot point at 78% from that. This is a monthly chart. We're going to also take a look at the daily. So yeah, it has been below the HMO cloud for a while. It tried to break above it, wasn't able. But another formation here. So I'm getting confused here again. Look at that. Do you see what I'm seeing? There is potential. Let's try out. Okay, there you go. Let's try a nice emoji. Why can't I find this thing? Okay, there you go. So there could be a potential double top right over here, double bottom right over here. See that? So even though pound CAD seems to be under pressure, it also could have bottomed out. It has tested this kind of angled double bottom right over here, but it has yet to reach the neckline. This is a little bit confusing. This is a little bit of a mixed signal for me because we have break below the Ichimoku cloud. We have Kijun line below the Tenkan line. All the Ichimoku side is bearish, but at the same time, there could be a momentum for this to reverse. So if you really want to trade pound CAD, so one way to go about it is that this could actually turn into a triple bottom because the prevailing, future cloud is kind of turning down. So today is kind of indecisive. One way, so this is again, one signal that I could think of. I wouldn't personally trade this. Looks like the bearish sentiment is stronger. So if you do want to give that a shot, this would literally be like gambling, right? You can give that a shot and kind of target the lower band of the prevailing Ichimoku cloud as your target, get into a bearish position, and get out. Otherwise, alternatively, you can wait and see if the pair breaks above the Ichimoku cloud, and that is when you can take on a new Fibonacci Ichimoku based bullish strategy, which is when it breaks above it and you get your buy signal, you can target this alternative bullish signals levels. 38%, which is 170, or 50%, which is 174. I wouldn't go anywhere above that. And as I said, right now, the strongest signal that we've had in pound crosses was pound dollar. All the other ones are a little bit, pound crosses are all very risky at the moment to begin with. Pound CAD, it's a minor, right? And the liquidity in it is a little bit lower as well. So that is also an added factor, especially if you don't live in the UK. So minor currency pairs for people who don't live in that country are a little bit risky. I know that we have a bunch of people today from the UK. So in the UK, you can really consider that because your transaction fees are probably lower. But for those in Brazil or the US or Australia or, well, any other place in Europe, that could be a little bit of a factor as well. So keep that in mind as well.